right, good morning, Checkmate crew. It's the opening bell of the New York Stock Exchange, 9:30 a.m. Eastern Time. Today is Thursday, October 6th, 2022. Mickey Blindside here with your market memo. First of all, let's go over some of the changes I've made in my positioning. I sent these alerts in real time on our Discord. So guys, if you're joining us on Twitch or YouTube or Facebook, we got links in the description. I send out these alerts throughout the day live, so you might as well join. But anyway, I got in on the $8 puts, okay, just so that you guys have can see that position right there. I did open it up, all right. So that I got in at 14. Looks like we're in the profit on those, decent profit. And also to TLT, remember our TLT plan? We've been looking at it for weeks, and we scrapped the original plan, back when TLT was 110, like about a month or two ago. And then I said, hey, if we get certain data conditions or in certain price action signals, we're going to go after it. And we did, and we're actually in the profit on these too. This was the call spread for November. Again, I sent this out alert in real time yesterday on Discord, the 108 113 call debit spreads. So I just wanted to show you guys, I have transparency. I show you guys every position that I have. So I just wanted to share with you guys that. If you guys want to, we can go over the exact signals. I said right here, if we hit that one standard deviation Bollinger Band and we back off from it, get some type of price action signal that it's worth bet on the longer term treasury bond prices going up, because this is yield. TNX is the yield. So when yield comes down, the price of the bond goes up. So we've seen that before in the past, where if it breaks and breaks that one standard deviation Bollinger Band on a momentum basis, it'll touch the 18-day moving average, and then it will retest it from the bottom. I mean, we've seen that before. Here, you see that? We lost it, and it took some time, but it finally came up to that point, and then it would continue downward. All right. So same thing here. It bounces, and then it continues down. That's what I'm hoping for. I'm hoping it bounces and goes down. And again, the original thesis from months ago was our copper and gold ratio chart that we have. Let me just bring that up real quick right here. All right. So this is what we've been looking at, and if we put TNX with it, and we look at this on a weekly basis, you can see since 2007 it's tracked the copper divided by gold times 1,000. It has tracked and been a leading indicator for where the 10-year treasury is going to go. And so whenever there is a disconnect, generally the 10-year will follow. And I think with the, from last week's special session, with my beliefs that I think some type of intervention by the Fed is going to happen, and I think it's going to be in the form of a yield curve control. I think this is a very good bet. And again, we got a good signal from TNX. It's bouncing away from its upper one standard deviation Bollinger Band, all right, from the TNX chart. It's bouncing, remember, I told you about this. And so that's why I took the TLT trade, okay? And it's just a bounce trade after TLT. TLT actually also has kind of the similar Bollinger Band structure. And so I think I might just use that as a take profit, which happens to be around the long strike, around that 108. So if this bounces up to 108 or so, I'm out. Okay, so that's how I plan on playing this. That's my plan. So by the time it gets to 108, if it happens within the next couple of weeks, I probably will have doubled my call spread. So after a doubling or so, I'm good. I'm good with those profits. All right. So that's the additions of new positions. Okay. The market right now is flat. It's just kind of open flat today. Let's see what happens. The first 15 to 30 minutes of the of the day, especially in the options market and with the indices, it's usually just a lot of noise. So I am not, we don't really have a direction yet. So let's see how it plays out. Dollar is trying to reclaim the area above the 18-day moving average. It did make, I think it closed higher than the 18-day moving average yesterday, just by a smidge, and now it's over. Let's see where it closes. If it goes back down and closes under it, I can see the dollar coming down to its lower 2 standard deviation Bollinger Band. But again, it's got to close beneath this. Again, the currency, remember from months ago, the 3-day rule of currencies for big levels like this, we want to see for 3 days it come back down to this level. So this broke the 18-day moving average. So 3 days, one, two, we got one more day. So by tomorrow, and tomorrow is also the end of the week, coincidentally. So tomorrow, if we can close under this, I think that's a very good chance we might see this lower 2 standard deviation Bollinger Band. And we've seen this in a lot of the currencies. It loses the 18-day moving average, and it fights there. It kind of like tries to bounce around there for 2 or 3 days. And if it really decisively loses it after that 3rd day, we usually come back down to see it again, right? Like this, okay? Just like here too, all right? Just like here, all right? So this happened pretty frequently this year. That's kind of been the currency pattern for the year. All right, we saw it also in the euro. We saw that in the Australian dollar. It's just all over the place. This structure with the 18 length Bollinger Band, it seems to be a thing. So I'm just going to keep using it until it stops working. So again, let's see what happens. Tomorrow's the 3rd day. I think tomorrow's close, the weekly close, will be very telling on where the dollar wants to go in the short term. And again, if the dollar keeps coming down, I don't think we're going to get that pivot in this November FOMC meeting, okay? Because the market is loosening conditions for the Fed. It's basically doing what the Fed needed it to do. So there's no reason for them to pivot at that point. Probably then the pivot will happen for the December meeting. Okay, if the dollar is able to actually negate this breakdown and actually close higher by tomorrow, and it just keeps going up, then yeah, and then it's possible, okay, that we see that pivot in November. We'll see. All right, we'll see. These are just all possibilities. So I'm just trying to prepare ahead and think 5 or 6 moves ahead, just in case if we get certain conditions. All right. Oil. Let's talk about oil. A lot of people are talking about oil. It seems to be the thing to talk about right now all over social media. Everybody's saying that, these are false moves in the market. A lot of Biden bashing. I'm not saying it's right or wrong. It's just, I don't see how that pertains to making money. Okay. So we'll see. We'll see what happens. Yesterday, it did end up a little bit higher. I know during our morning session, it looked like it was coming down, but I guess not. So, I think right now there's some back and forth between OPEC Plus and the White House. We saw some news coming out of the White House about some, basically criticizing OPEC Plus for their decision. I believe Biden said that this was short-sighted. OPEC is a cartel, so they obviously, they want to maximize the money and the revenue that they make, and to them, this is not good for them. They want, obviously, they want prices to be a little bit higher. OPEC also, if you look through history, though, OPEC has generally not a very good track record of enforcing production cuts. Members will deviate. So it is a cartel, but it's not really a well-managed cartel. Individual actors within the cartel will try to deviate from the plan and try to get market share over other members. So this kind of backstabbing within the cartel is actually kind of common. So, even though there is this supposed, cut that goes into effect in November, they may not enforce it. At these prices, we could see some of the smaller OPEC members try to get market share. That is definitely possible. So we shall see. Again, congratulations to those who took the long on oil from 75 to 77. I said, this is not a bad place to take some profit. Again, my plan hasn't changed. I'm shorting here. Okay, 115 to 120, I'm going to short here. All right, I'm going to scale in some put spreads. Okay, if we take a look at the December, and I think by that point it'll probably be like November, December. So it'll probably be on the December contract. So that's the 105 to 110 zone on the December contract. All right. What else is in the news? You go in commodities. I saw some reports about fertilizers. The fertilizer delivery in Brazil was lower than expected. It's about like 5 to 7% less. So now there's some fears about next year's crop. What's going to happen to next year's crop? Since a lot of farmers are getting less deliveries on their fertilizers. And so, a lot of that has to do with the supply chain. A lot of it has to do with cost. I think a lot of it has to do with the dollar being strong. Okay, it makes everything more expensive to import. Okay, I think that has a lot to do with it. It's a dollar strength as well too. It's all kind of tied together. The markets is, it's all very connected. Okay, it's a system. All right, it's with lots of different participants. It's a force of nature. So, but anyway, so that may be maybe signs ahead that fertilizer prices keep going up. I mean, Mosaic, its stock has been doing pretty decent. I mean, it's been holding up its value even though we've seen DBC go down. Actually, DBC, it looks like I checked about a week or so ago and we were at these levels. So it looks like DBC is even the commodities ETF is recovering some of its earlier losses. What's going on with corn? Let's see what's going on with corn. So corn, wheat, and soy. I know soy numbers. I know soy harvest is coming out. Some of the soy numbers were not bad, and so I think that's why we're seeing some of the pricing come down. There was some fear that the soy crop might be a little bit low with reports from overseas in Latin America about their soy meal exports. But again, for me, the price, the plan hasn't changed. Before the harvest season, before the planting season, before next planting season, which happens, it's going to start around March or April. If we get to these levels, I'm going to short. Okay, and I think that might happen closer to the December contract when the December contract starts trading. So I have alerts on the December contract. If the December contracts get to these levels, I'm going to start shorting. Ideally, I want to wait for that 748, 750 zone. Okay, if we get there, I short. All right, but again, it has to be before the next planting season. I think after planting season, I think there's a good chance that we see some upward price pressure, especially in corn. Okay, I don't know that for sure, but I think just from the data and just from fertilizer deliveries, even here in the United States, I think next year we might have an increased soy planting season rather than a corn planting season, and I think the market is already actually, pricing that in already. It could be. Okay, so we'll see. But yes, before planting season, I'm still going to be shorting at that zone for corn. Okay, that hasn't changed. Okay, so that's commodities. Let's take a look at some of our internal data like we always do. I posted this just a couple of hours ago. We did not get our fourth day in a row in junk bonds ADL. We did not. Okay, so we got 3 advances and then 1 decline. The decline is actually kind of small though. It's not that large. But still, 4 in a row, it's a hard black and white number. 3 in a row versus 4 in a row, there's a big difference. So, at least statistically, if you go back in history, there is a big difference. So we did not get our 4 in a row, okay? However, corporate bond market is looking stronger, though. Maybe stronger is not a good word. It's stabilizing, okay? It's stabilizing. So at least in the short term, that is a plus when it comes to our liquidity conditions, all right? Also, too, the high-low per day is actually decreasing on the minus side. So, we've had decreases from the high-low on a daily basis. And when we look at this chart, this is the cumulative of that. So it adds all the previous ones. So if it's a decline, it would subtract. If it's positive, if it's green, if this is green, then it would be added to this number, and that's the line, right? But as you can see here, the declines are getting less and less, okay? So looks like it is flattening out. Generally, that's a good sign. But again, the MOAB doesn't happen unless it curves up above everything and starts getting an uptrend. Okay? So I'm still monitoring this, but when it flattens out, we could have a rally last like a week or two. Okay? We have more sustained rallies when this flattens out. So we might have a little bear market rally here. All right? That could last, a couple weeks. I've been saying that now for like a week or two now, for a few days now. We saw the data change earlier this week and end of last week, remember? We saw it stabilizing. It started with a 5-year treasury, remember? That was the important data to look at. Now I think it's TNX. I think TNX is now the important yield to look at. But New York advanced decline line also yesterday, even though it was a down day, we started almost 2% down, but we recovered almost all those losses. We only went down by a fraction, like 0.2 or maybe something like that, 0.2%. So that the New York the New York advanced decline line did not make that low. Even when it was 2% lower, it still didn't look that bad. So maybe this is kind of a flattening of the advanced decline line. Again, a positive sign for our liquidity data, and then our equal weighted S&P 500 also did quite well. Actually, it's almost showing a exhaustion signal, so we might see a continuation of this, and that suggests to us that there's a lot of market breadth, at least increasing market breadth in the short term. Okay, this is all short term. All right, long-term signals would be when this cumulative line really starts going up above all these moving averages. All right, but no, that is not what we're seeing. Okay. Also, a longer-term signal would be if this can make a higher high, higher low, which, again, we have not seen. It's still making lower highs, lower lows. So that is not a long-term liquidity improvement signal. All right. HYG, it is up today. Let's see what happens. Okay. Let's see what happens today. If it can keep above this level, all right, if it can stay above this level right here, which is like 72.95 zone, if it can stay above there, that's pretty positive sign, okay? That's a pretty positive sign. TIP, TLT, inflation expectations still in no man's land. Again, I wouldn't be surprised until end of the year it just chops around like this. And I think this continues higher next year, okay? That's what I think, all right? Even the dollar outlook, I told you guys that, we may see the dollar come down. I mean, guys, if you look through history, all right, even back when we had that hyperinflation in the 70s and 80s, it started really in the 60s, 69, 68, 69. That's when we started seeing those signs of inflation. So even when we went up, we had times where the dollar would come back down, it would go back up again. It made this, it made even a lower low at one point, and then it screamed back higher years later, right? I mean, that could happen here. It's not like this has to go in a straight line, although it does look like a straight line from 2021 to now, right? But it doesn't, higher levels, just because we think we're going to get some higher levels doesn't mean it goes there in a straight line. I think it does come down. It probably chops around for a bit, and then maybe 2023, 2024 will probably scream back higher. All right? So you got to be a little bit more long-term minded when it comes to currencies. Okay, they make more like multi-year, multi-decade signals. Japanese yen. Japanese yen. It is approaching. It's approaching our levels, I guess. It is approaching our levels, getting closer and closer to our alert level. Not yet, though. Not yet. Once I get alerted of that, I will let you guys know if I take that trade. And that, I think, is the most important thing when it comes to our trades and whatnot. Are there any trades you guys wanted to see in stocks? Google. Okay, I'm seeing Google. Google 102. Is it up for the day? It is up today. Let's take a look at here. I'd rather take a look at this. I mean, yeah, it's keeps going up. Let's take a look at weekly Bollinger Bands. It was riding that Bollinger Band down on the. This is the weekly, so this is a daily chart, but the weekly Bollinger Band, 2 standard deviation, 18 length. I mean, you know, longer term swing traders may want to take profit if they're long. They might want to take profit around that 109, 110 zone. All right, Google is it's a stock that is the most sensitive to the dollar. Okay, if you see the dollar really go down, Google is going to have a field day with it. Okay, so if you guys have puts, I know some of you have Google puts. If you have Google puts, you're hoping that the dollar keeps going up from here. Okay, because if the dollar drops, Google, again, the most sensitive to exposure to a strong dollar, will really like it. All right. And again, most important chart of the day is TNX. If the 10-year yield keeps going up, then that is not going to be that's not good for tech stocks. All right. If this keeps going up, multiples are going to shrink in tech stocks. All right. If this comes down, though, we might see a relief rally in tech stocks. So keep that in mind. All right. How's my TLT doing? Oof. Back to the same levels I bought it at. So let's see here. Am I around? I'm right at break even for my TLT spreads. Go figure. Okay. It is what it is. UVXY, though, is down. So that's good at least. UVXY still 1% down. This is where we have the edge for risk on, I think. If you're going to play risk on in the short term, I think buying UVXY puts is the way to go, because that thing is going to decay with contango. There's now contango, slight, very slight, but now there's contango. Okay. Crypto. Let's go to crypto real quick. I still haven't seen anything with crypto. Oh, first of all, let me talk about a clarification here. So I've been calling this 1350 a gamma pin on Ethereum. I think that's the wrong word to use, because we use the word gamma pin in our educational video. If you go to our playlist, I have that gamma pin video. That gamma pin on the S&P 500, that happens when gamma's positive, when market makers have long calls and long puts because other participants are short on those. And that's the pinning that happens because both sides, they're delta hedging on both sides because the gamma is so high on the gamma exposure is so high for the market maker. So, when I was talking about ETH, I guess, I don't know what we're going to call it. I guess we should call it like a gamma zone, I guess. These terms aren't standardized yet. It's not like gamma squeeze. Gamma squeeze is pretty much, standardized now, but the gamma zone, basically, remember how, and the reason why I call it the gamma zone is because, we had actually a flatter gamma at that 1350 strike, and then it all of a sudden went negative. So what does that mean? That means a lot of people started buying. And remember how we saw a lot of those screen trades? Deribit calls it screen trades, but the smaller trades, the non-block trades, we saw them buying calls, and so a lot of speculators, and which I think a lot of hedge funds are too. They're just speculating on the Ethereum option chain. They bought all of these calls. Well, what also is going on with the open interest? Remember how open interest is also decreasing? So as we get closer and closer to 1350, we have seen, right there, the open interest actually decrease. Okay? So what does that mean? That means all those people buying those calls, they're taking money out the table. Basically they might be underwater, or maybe they have a slight profit and they're cashing out. As we noticed that the OI kept going down as it got closer and closer to that. So that was all these calls that got bought all of a sudden at that zone, and then participants and speculators are taking money off the table. So that's why, even though the risk on assets are going up, we're seeing prices just keep coming down to 1350 because just all those call buyers are just taking profit. All right, so that's a gamma zone. We just saw that here. Every time it goes up there, boom, those calls get sold. Here, boom, calls get sold. Right here, boom, calls get sold. And it's because of all those calls that were bought, and from like weeks ago, or like a week ago or a few days ago. So all those calls being bought means the market maker had to short those calls, which is that negative gamma exposure that we're seeing. So I just wanted to clarify that. So that was my fault calling it the gamma pin. I was just looking back through the videos, and I noticed I used gamma pin for that term on the S&P 500, where the gamma exposure is actually positive for market makers, and that is not what this is. Okay, this is I guess we'll call it like a gamma zone or a gamma drift, or maybe a gamma ceiling. I don't know. We'll call it something different, but for now we'll call it the gamma zone. Okay, the gamma zone is that's 1350, and it's still a zone of interest until the 7th, which is tomorrow, expiration. Okay, I think it's still pretty large. Last time I checked a couple hours ago. Yeah, it's mostly in that October 7th. So we'll see what happens. Okay, we'll see what happens. Afterwards, then we don't have that pull anymore, and that'd be interesting to see what happens after that. I think price is going to break one way or another after that, and we'll see what happens. Yeah, we'll see what happens. Okay. As far as block trades are concerned, I did see one block trade. It was a pretty big block trade. I think it was over $1 million, or just shy of $1 million, maybe. Hold on. And it was just one single leg. Yeah, one single leg right here. September 2023, the 1,800 calls. Somebody sold these. I don't know if it's because they are hedging or what, but I didn't see a matching order. But that doesn't mean that it's on its own. It could be somebody legging in. Maybe they legged in short here, and they could be offsetting this position with other trades. It could be that this particular entity is also doing all these other trades too, but they're just doing it separately in different time, timing it differently. It could be. So there's no way to really know. But that's a pretty big trade to do just at once. 971,000, about $1 million. We haven't seen a close to $1 million trade for a couple of weeks now in ETH. So maybe the trend of the open interest going down, maybe it reverses. This is the open interest, by the way, for ETH. Let's actually look at dollar value. Yeah. So remember how it was like at 7.8, 7.9, almost 8 billion, and then it kept going down and down. So maybe this is a reversal. Maybe it comes back up. Who knows? That could be. We could see some more participation, but it's gone down pretty significantly from 8 billion to 5.5. That's like almost a third off the top. All right. So participation has been decreasing for a couple of weeks. We'll see if there's more action happening or not. I'm still sitting, nice and happy at the zone. Again, we bought at 1241.46. Too bad I didn't go big on that. But my bigger buy zone is here, ETH gold ratio at 0.55 or so at this red line. That hasn't changed. My plan on that hasn't changed. Anything else you guys want to look at? Any other requests? Going once, going twice.
Google.
Google. We just went over Google, but okay, we'll go over it again. But Google, again, as I said, you know, it's all really dependent on the dollar. It's the most sensitive to the US dollar. So if the US dollar just keeps going up, Google is still going to have a very hard time to sustain a rally. And you can see it here. It's already giving up a lot of its gains for the day. And it looks like it's because it's due to the dollar strength and also TNX. If TNX keeps going up, TNX was in the negative, but now it's in green territory for the day. If this goes up, multiples shrink in tech stocks. If the dollar goes up, that hurts the bottom line for companies that make a lot of revenue overseas, like Google. Okay, so if you have puts on Google, you're basically hoping that TNX keeps going up and the dollar keeps going up. But if TNX and the dollar, if they drop, then you're going to see a rally in Google and tech stocks in general. Okay, so this is kind of no man's land. It's kind of no man's land for me. I mean, if it, you know, and I know that I'm a little bit, I do a lot less active trading than some of you guys would like. But if I wanted to short, I'd still wait for when the S&P 500 gets to our sell zone right here, the 41.25. Okay, 41.25, which I presume on Google, probably be one of these levels right here, right? Yeah. So I mean, you know, if I wanted to short Google and I wanted to be patient, I would be shorting around here, around 110. Okay, that seems like a very good risk to reward risk zone right here. So you buy put options here or put spread, and if you close like, you know, 2 or 3 sessions above that, you get out. You know, 2 or 3 months out. Keep the gamma low so that if you're wrong, the cost of being wrong is really low. Here, you have no idea. I mean, it could go up a little bit more and then come back down. You have no idea. Okay? It's kind of no man's land for me. But here, 110, around when S&P 500 gets to 41.25, that seems very interesting. And I still plan on doing that. I still plan on shorting U.S. stocks when we get to this 41.25 zone. That's still part of the plan. I mean, right now, I mean, look at this. Look at this movement right here. Perspective, guys. All right? This is small. This can retrace down, you know? What is that, a 50% retracement? A lot of people that read charts, you know, they say 50% retracement is not that big of a deal. Well, I mean, you know, if you're really a chartist, then you should know that, you know, even moving down to here is not a big deal. In options positioning, definitely, you know, this is not a big deal at all. There's still a lot of in-the-money puts, and we could still see VIX go up, and we see, you know, little tantrums here and there, but, you know, we could still move up even after retracing that, right? So, again, guys, look at this huge move right here. It could retrace and then still continue higher in the next couple of weeks. You don't know that, all right? You just don't know. But here, though, again, reward to risk is in my favor. I know if it closes, you know, 2 or 3 sessions above this, then I know I'm wrong and I can get out with a small loss. Here, you don't know. You don't know when you can be. When, you know, you don't know when to throw in the towel. Basically, all right. You have no idea to know. Is this just a retrace, or is this going to keep going down further? You know, will it come back up again? You know, is this a false move? You have no idea here. So it makes managing risk difficult, at least in my opinion. I think managing risk is a lot easier shorting here. And that is what I still plan on doing. Okay. Anything else, guys? All right, I see no one else typing. So that wraps up our session of the morning market memo. Again, links are in the description. Come join our Discord, be a part of a growing community. There are no sub fees, no paywalls. It's of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show some love, baby. All right, I'll see you guys soon. If I have some time, I'll try to do another live session tomorrow, and I'll announce it on Discord.